What's up, everyone? It's Scotty with MoneyVest. So we've got a big week on our hands because not only do we have a huge earnings season for the first quarter of fiscal year 2024, but we also have Jerome Powell's speech. We've got consumer sentiment, expectations, inflation expectations. A lot of things are going to be coming out this week in the second week of April, actually third week of April here, as we are getting started with the second quarter of 2024. So hope you all are doing great. Volatility was higher last week. We did have S&P 500, of course, coming down, selling off down to its 50-day moving average. And as a result, I will be sending out a lot more alerts in the channel for buying opportunities, and a members only private video is going to be coming out very soon that's going to lay out all of the stocks and ETFs that I'm interested in, that I'm planning to buy, and specific levels and prices where I would be buying them. So link's going to be down below if you're interested in joining our community. Of course, getting access to all the members only private videos, including all the trade alerts and the trade ideas, options alerts, as well as access to our early MoneyVest platform. That's going to be the beta launch that we're going to have very, very soon. So link's going to be down below. We'd love to have you on board, and let's just get started. So this is what the earnings calendar looks like. Of course, last week we did get the earnings from banks. Jamie Dimon did have some comments on inflation and the economy as well. Even though we did have very strong results from the banks, markets did, of course, sell off on the back of, once again, higher yields, dollar index pushing higher, energy prices on the rise on the back of course, inflation also getting hotter than what the expectations were, and the markets repricing all the interest rate cuts here from 6 down to 3, now down to one single cut in 2024 is what's being priced into the market right now. So we do have Goldman Sachs reporting earnings today. So pre-market, they are going to be reporting. Charles Schwab, so we're going to see that continuation of the banking earnings here. M&T Bank, then we got First Bank also reporting after the bell. And then tomorrow, so Tuesday, we've got Bank of America, we got United Airlines, Interactive Brokers, Johnson & Johnson, Morgan Stanley, BNY Mellon, PNC. We got United Health Group, so UNH. A lot of these companies, very, very important S&P 500 constituents, are going to be reporting for the first quarter 24. And one of my favorite companies, top stocks in the market, especially when it comes to semiconductors, ASML, reporting on Wednesday pre-market. I will be doing a video on them after the earnings are released. We got US Bank Corp, we've got SHL, we've also got Alcoa, and of course we got Prologis, Travelers reporting, Discover's reporting after the bell on Wednesday. Thursday is when one of the first FANG companies reports, and that's going to be Netflix, of course, on Thursday after the bell. It's one of the first companies to report among FANG stocks. We got Intuitive Surgical, and we got TSMC, also another very, very important player in the semiconductor sector, reporting. We got KeyBank, we got DR Horton, Infosys, and Ally Bank also reporting. And then on Friday, we got American Express, Procter & Gamble reporting as well. Wipro is going to be scheduled for Friday before the bell as well. So lots of earnings. My favorite ones to be looking at, of course, the banks, Bank of America, Goldman Sachs, Morgan Stanley, Interactive Brokers, a couple of airlines, United Airlines, and then very important semiconductor stocks, ASML, TSMC, and Netflix to kickstart the FANG earnings as well. Now, FOMO is dead. Welcome to OMO stock market, so OMO, and that basically stands for okay, missing out. And I think we've talked about this on the channel before, and how this rally is primarily driven by two characteristics. Number one being a lot of the cash that's sitting on the sidelines. So one of the members or one of the subscribers asked me how to get the data for, where do we see the data for how much cash is sitting on the sidelines? We actually have a spreadsheet for that. So this right here is going to be our documents and Google Docs that everyone has access to, all the members have access to. And again, if you want to join, you can join with the link down below, and of course be able to access all of our, again, intrinsic value, S&P 500, RSI, volatility. We've got a lot of different types of spreadsheets that you can kind of see on the top tab here, and all of this is going on the MoneyVest platform. So eventually we won't be needing any spreadsheets. Everything will be on the platform. You'll simply log in and have all the access to all the data. But for now, we gotta make do with all the spreadsheets here. So this right here, total assets in money market funds, if you come over here, you'll notice that right now we are sitting at just under $6 trillion. This number will be updated when the first quarterly numbers come out. But we have been sitting at very, very record levels. And again, this is a lot of money sitting on the sidelines at record levels here, which is now starting to get deployed. And every time we see a pullback or a dip, buyers see that as an opportunity to once again go back into the market. So that's number one. Number two is the earnings expectations have been going higher. There's a lot of expectations for earnings for FANG stocks, more specifically Big 7, Big Tech here, to report a 40+% growth on a year-over-year basis. And for that reason, we're seeing a lot of momentum in technology, and that concentration continues. However, we did see a little bit of a pullback, of course, on Friday, Thursday last week. Volatility was higher. Pre-market, if you come over here, VIX is, again, trading a little bit over 17 on Friday, up almost 16%. So we'll continue to monitor how high the VIX goes, because the higher it goes, the better the risk reward becomes, the better the deals, the better the dollar cost averaging opportunities in the market. That's exactly why I'm telling you, I'm asking you to be ready with cash, because the markets will give us an opportunity here as the VIX continues to go higher. So it's okay to miss out right now, because there isn't really any rallies happening. There isn't really any momentum. So this right here was from Kane Anderson Rudnick, strategist Julie Vale, and she basically says, I wouldn't be taking as a big of a risk because of valuations. It's terrifying now how narrow this rally has been. And stocks had a tough week. S&P 500 dropping 1%, and the Dow Jones down nearly 2% following the hotter than hoped for consumer inflation report on Wednesday. And valuations, though, still look stretched. And the S&P 500 trading for more than 21 times 2024 earnings, estimates above its average for the past 5 to 10 years after gaining 8% this year. And she also goes on by saying, and I quote, "You need growth to surprise to the upside. If not, high multiples can get compressed, and that can happen quickly as well. Investors will run for the exits." And that's what's happening in the last couple of days here, as we did see a pretty dramatic sell-off. So if you come over to, again, S&P 500 here, you'll notice how interesting last week was. We did see, again, 2 back-to-back weeks of red. So this is about as clear as it gets. We saw a breakdown from a pretty big sort of trend line. So we saw week after week, very strong, consistent gains. And last couple of weeks, of course, we've seen some slowing down. And I also highlighted how the momentum was shifting, because we are seeing lower highs and lower lows. We are seeing weakness on the S&P 500, even on the 30-minute time frame. So if you come over to the 30-minute time frame on the S&P 500, it's very clear, it's pretty apparent that we were seeing some lower highs and lower lows, as you can see on this chart. And I specifically pointed out to this level at 52.20. That was a resistance where we got rejected at. And of course, we're starting to roll over once again. And if it continues, well, guess what? There is possibilities for us to see a bigger pullback, a bigger correction in the S&P. And that's exactly why it is important to be patient. Let the prices come to you. This is an exciting time, folks. Like, this is literally the market's way of telling you that we're coming down to discounted levels. We're coming down. We're giving you the opportunity. The margin for profit is increasing. This is it. I mean, this is what gets me excited. And I know that a lot of people don't like that, because a lot of people are very optimistic and very excited when the markets are going higher, and they're sad and depressed when the markets are going down. But we have to flip the script. We have to flip that psychology. You have to get more excited and more upbeat and more happy when the markets are down, and be more cautious, right? Be more alert when the markets are going higher, because that's the time when the risk is at its highest and the profit potential is at its lowest. And that's why that's no way to invest for the long term. It's really when the markets are down, volatility is high, is when the profit potential is highest, risk reward is the best and most favorable, and that's when we start dollar cost averaging, and that's when we start increasing our buying activity in the market. We're still in this dichotomy of dispersion in earnings, says Joe Amedo, Chief Investment Officer at Berman, and noting that profits for companies in many other cyclical sectors might actually decline in the first quarter. Earnings are expected to improve as the year progresses. Second quarter profits are forecasted to rise nearly 10%, and earnings for all of 2024 are estimated to be up 11% from 2023 levels. And we should start to see better balance here. Companies should gain more earnings momentum because of the resilience in the U.S. economy as well. Now, Jerome Powell is also talking later this week. So we do have Jay Powell discussion here at the Tiff Macklem, Governor of Bank of Canada. And this is going to happen at Washington, D.C. at 1:15 p.m. Eastern on April 16th. I've got a flight tomorrow, so I will try my best to see if I can live stream it. But tomorrow, Jerome Powell is going to be talking on Tuesday, April 16th. This right here is going to be the economic calendar. So we do have the core retail sales, the regular retail sales month over month coming out. Expectations are 0.5% forecasted and 0.4% for headline retail sales here. Retail inventories and the Atlanta Fed GDP number for the first quarter also coming out. 2.4% is going to be that potential expansion in the first quarter. And then, of course, we've got Jerome Powell talking here. So that's going to be at 1:15 p.m. Eastern, as I already mentioned. Housing starts, permits, building permits, industrial production. Again, Atlanta Fed GDP numbers. Then we got crude oil inventory. We got a 20-year bond auction. Very, very important. Beige book is coming out on Wednesday, April 17th as well at around 2 p.m. Eastern. Crude oil inventories, a couple other FOMC members talking like Bowen and Mester. And then, of course, we got continuing job claims, initial claims every Thursday that they come out. A couple other FOMC members, once again, talking. Got existing home sales, and Raphael Bostic is talking. Member Bowen's talking again. Member Williams is talking again. Fed's balance sheet comes out every Thursday after markets close. And, of course, 5-year TIPS auction also happening on Thursday at 1 p.m. Eastern on April 18th as well. And then finally, we got some crude oil inventories and oil rig calculations as well. Now, global factory activity has turned the corner. So JP Morgan's global manufacturing PMI index is back in the expansion territory, 2 months above index levels of 50. So this right here is where we are. And this, again, continues to show that the economies worldwide, not just in the US, are seeing some expansion, right? We're kind of moving towards that expansion category again. U.S. economy has been so strong, so resilient. Unemployment levels are really, really low. And for that reason, I think the Federal Reserve will really need to rethink whether they even need a rate cut or not. Because as you'll notice, I wouldn't say a lot, I would say some members are now turning the corner towards from being dovish to somewhat hawkish to very hawkish to now expecting 0 rate cuts, as many as 1 rate cuts. 1 they've already come down to, the markets have. And again, it doesn't take long to go from 1 to 0 in 2024. So those are some things to keep in mind because, we've been talking about this potential repricing risk for a very long time. And the markets are already starting to see a little bit of that momentum for the last couple of weeks as we have already sold off. And we're now closer to that 50-day moving average again. That's going to be 51.23. And again, markets are testing that 50 SMA once again. So if you come over to S&P 500 over here, and if I go over to the daily chart and simply just bring up the 50 simple moving average, that's going to be the green line you see on the chart, right? That's where we are. We're literally sitting right above that 50 SMA. If the markets break down below that level, we've already broken down below 21. So if I bring up the 21, you'll notice that 21 actually acted as a very strong area of support. So I mentioned that time and time again, once, twice, 3 times, 4 times, 5, 6, 7. So we were consolidating sideways and we broke down, and now we're testing the 50 simple moving average. We literally last week on Friday, we came down to that 51.11, 51.10 level and then got bought up a little bit. But today, and of course this week, very, very important, very incredibly important support level to watch. In case we get a breakdown below this, well, then unfortunately the next support is going to be down in the 5,000, down to as low as inside this first green rectangle and aligned with that 200 simple moving average as low as 47 to 4,800. And of course, at that point, volatility will be well in the 20s, giving us even better opportunities to buy and dollar cost average into the market. So hope you all are having a good start to the week. Make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time, but just want to give you a little bit of an update. And my message to you is very simple. Prices coming down is never a bad thing. Me wanting for prices to come down is also not a bad thing, because I understand when prices come down, it's only opportunities for us to buy and dollar cost average. I want you to do well. I want you to make money in the long term, right? I want you to not make money, let's say 6 months from now or 4 months from now. I want you to do so well that you are consistently generating good returns over the next 20, 30, 40, 50 years, your entire investing lifespan, you're able to generate good profits. And that's why my job here on the channel is to keep my sort of biases aside and give you the most objective and real analysis. And I'm here to tell you that when prices come down, that's where the risk reward is the best. It's literally the best when prices come down. When you've got a 20% sell-off from all-time highs, that quite literally happens so rarely that gives you the best buying opportunity and the best risk reward ratios. When volatility is high and markets are down, by all means, close your eyes and dollar cost average, right? And we've talked about this. In 2022, we talked about it. In 2023, towards the end, we talked about it. So it's not like we're always bearish. We're always expecting a sell-off. No, when markets give us the right opportunity, we are bullish. We are buying. We are dollar cost averaging. But right now, let's just wait, be patient, let the prices come to you, and then we will start firing off on those alerts and then just sit back and enjoy those gains again. So hope you all enjoyed this video, find it helpful. Make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.